Hello and welcome to the Crypto with Kash Cast episode number 7. My name's Duncan Morland. I'm your host, and I'm joined by Kashaya Abbasi. Hello, Kash.
Hey, you're right. How you doing?
Kash runs the fortnightly newsletter Crypto with Kash, and we're here to talk about cryptocurrencies. I'm all right, Kash. How are you doing?
All good. Just chilling.
Yeah. How's your day been? You said you're doing some DIY.
I was doing some DIY, cable management.
Yeah.
Fixing some stuff around, like emptying drawers, finding things that I've not worn. Just donating it to charity, really.
Selling it for crypto, yeah. For crypto.
Could do that.
I'll be thankful when it's like when all computer stuff is wireless in the future. That would be
definitely 100%.
Before we get started, just say, like, if anybody has any topics or questions they want us to cover, they can put them in the YouTube comments below or send us an email. We'll have our contact details below. And we do appreciate any likes and subscribes, because we're very small, but we're trying to grow. And today we've got three kind of topics to talk about.
Mm-hmm.
Two of them are linked. And the first one is the crypto markets are crashing. Especially in the last 24 hours, they've gone down a lot. What do we do, Kash? Do we panic sell everything and, I don't know, go and hide somewhere?
It's a very good question. I mean, if you've been part of the service for longer part of what we've been running it for, you would have experienced a few of these crashes by now. As we have seen so far from our track record, the prime time to buy is during these crashes. Of course, it could go lower. That's why we don't say go all in. We tend to dollar cost average or set buy orders, lower down, ladder them down so that we can pick up some coins on the cheap, because we're here for the long run.
Yeah, and you were kind of anticipating last week a sell-off towards Christmas, and it's kind of come a bit earlier than maybe last year. But I think it is really important. Like, a lot of people get into crypto expecting it just to go up, and it's like these markets are cyclical. And what's that old saying? It's like most people like buy when it's high, buy when the price is high, and sell when it's low. And really, you want to be doing the opposite. But it's so hard to do that because the markets are going down, and you just sort of panic. It's
100%.
Yeah.
I mean, the longer you spend in these markets, the more of a sort of shield you grow. You become more accustomed to these sort of crashes, and you realize that they are opportunities, really, to actually buy and actually average down your overall price. That way, if you're investing in fundamentally strong projects, if they are strong, solid projects which are going to be here for the long run, then you should see these as opportunities, because you basically have this idea that in the future they're going to be much higher. So if anything, this is a good time to buy it,
Yeah, it's just difficult, isn't it? I guess that's actually one of the questions we had from the communities from Hell, and they were asking, basically, like, would you set a cellular or send a cellular out for a portfolio coin that was at a loss, or would you just keep going with it?
See, that's a very good question. I think ultimately what it comes down to is if nothing has changed fundamentally for the project, if, for example, one of the biggest developers have not left, or, for example, they've found a fatal flaw in the coding, for example, then there's no real reason to sell. Of course, price action may have sent prices lower, but if nothing has changed fundamentally with the project, then these are just short-term fluctuations in an overall, long-term bullish market.
Yeah, I think that's really important, like, to talk about in general for the market. It's like the entire market, it probably led by Bitcoin, is down quite drastically. But what fundamentally has changed in sort of like the why people invest in Bitcoin in the first place, the kind of technicals or fundamentals of why it's a technology to invest in.
Yeah, exactly. And like I mentioned, the longer you spend in these markets, the more you realize how these price crashes, temporary price crashes, are actually good for the long term. Because if something goes straight up, as we have seen from Bitcoin and the wider crypto market since October 1st, everything's been going straight up essentially, and there haven't been that many, pullbacks or opportunities for traders to take profits. And it's good for people to be able to actually take some profits, let the market cool down a bit before the next leg can start up. Of course, when there are massive crashes like this, it may take a while before things go back to, normal being, going up more in a more sustainable way. But like we said, we're not here to trade here at Crypto with Kash. We're here investing for the long term. So yeah, we definitely see these as opportunities and not a reason to panic.
Yeah. I got two little questions off the back of that. I guess one is talking about how to judge where to buy in when the market dips. The other one is just something I noticed during the last crash, which makes me think that it's not over yet for this one, which is with all the kind of forum talk and Reddit talk and social media talk, it spikes when there's a market crash, but then when there's a prolonged market crash, the conversation just kind of people leave and stop talking, and that hasn't happened yet. Like the forums and everything are very active, and I remember like mapping it against a Bitcoin chart, and you could almost like when the price was down.
Yeah, like Google Trends, you see Google searches go up when the market's going up, and then when it crashes a bit, everyone just disappears.
Yeah, and it's not, and people are there talking about it still. And I think if there is a prolonged crash, like a sign of that is like people get bored and they take their money out and they stop talking about it, and that's really when you get like a prolonged, I guess, market cycle.
I think I've mentioned this before in a previous podcast, but I feel like the best way to make money in crypto is to stay when everyone else has left, to keep involved in these markets, because as we know, when everyone leaves, that's when prices are as low as that they can be, and that's when you can actually pick up tokens on the cheap, so that when everyone comes back, chasing the crypto train again, prices are much higher by then, Yeah,
I guess that feeds into the other question I was thinking of, which is how do you gauge where to set those lower buy orders and stuff? Like if the market's dipping and you want to, top up on some more of the portfolio coins or get in on another coin you've been looking at.
Yeah, what I've noticed is that Fibonacci levels work very well, and also previous resistance zones. So previous resistance zones, if they become support levels, and there has been like significant trade volume in those previous levels, then usually that would be like a good time to buy again. Like for example, even with the Bitcoin crash today, 42,000 was on a Fibonacci level. Yeah. So that marked the bottom, and it's literally bounced since then. And it's resting at around 48,000 now, which is yet again another Fibonacci level. So that technical indicator tends to work quite well.
And did you think that's like, I think we might have talked about it before, like maybe it's just because it's like a self-reinforcing kind of.
In a sense it is, because the more people who believe in these sort of things, the more likely they are to trade based off of it.
Yeah.
And the markets seem to work well with those because there are a lot of people who already believe that it works.
Yeah.
So, and even if you don't believe it, then you do have to respect it in a sense that other people are going to be doing it, so it might actually come true.
Yeah. Just to spell it out for people that don't know, like Fibonacci levels are kind of mathematical trading kind of technique.
Yeah, they show you they tend to show you support and resistance zones, and targets that you can use for a coin that's trending upwards, for example. They tend to work quite well in crypto.
And then also they're like support and resistance is basically like where prices where the market where prices reached a ceiling for a period and there's been lots of maybe sellers or whatever, or where the price has seen a lot of support at a level, there's been lots of buyers, so it's harder for the price to fall or go through those areas in the chart. I think last time the market crashed for Bitcoin, it was like $30,000 was the kind of the support,
and it works in conjunction with a lot of other like factors as well. Of course, that's not the only one. For example, there's this thing in human psychology where humans just tend to like round numbers, which is why the bottom was 30,000 and the previous top was around 65,000. So these sort of factors play into it as well.
Yeah, it's easier to talk about.
So
just to sum up what, like, I guess the guidelines and stuff we're talking about for members in this? Because if the markets are going to be down for, well, we don't know really, but if they're down for a few weeks, like, what is your kind of basic message, just to sum up?
Well, what we're doing at Crypto with Kash is we've set buy orders from our previous, in the write-ups. We've already set some buy orders. Some of them have been filled. There are some that it hasn't, the price hasn't reached yet. So we'll be looking at those closely to see where the market's moving. Of course, again, we're not here to make quick trades. We're here to invest in the long term because we believe fundamentally these projects are undervalued at the moment, and in the future they'll be much higher, as will, for example, the biggest coins, the majors like Bitcoin and Ethereum. Bitcoin tends to move the whole market. So if Bitcoin goes up, then altcoins go up. If Bitcoin goes down, it drags the rest of the market down with it. So yeah, we're going to be here for a while, see how the market develops. But nothing has changed fundamentally.
Yeah. And if people aren't using those lower buy orders and they're just keeping it simple and they bought in below the buy up to level, it's just to hold tight, really, isn't it?
Yeah.
And the new coin that you're doing a write up for this week will presumably be at a nice low price for people to
get. Yeah, and it will include lower buy orders even yet, should the market, continue.
Yeah. Okay, well, the next question we have is a bit different, and it's from Elliot in the community, and he asks, I'd love to hear more about passive income with cryptos, staking, farming, lending, etc. I'm also keen to hear more about using Polygon and decentralized exchanges. So maybe we can have a chat about that. I think we kind of talked about it a little bit.
Yeah, so essentially you can earn passive income through crypto by staking your coins. Essentially, by staking your coins, you will earn a certain percentage of the revenue that is generated on that protocol. So, for example, if a protocol serves as a decentralized exchange that takes a certain fee from every trade made on it, by owning those coins and staking them, you earn a certain percentage of all the revenue that's generated. So, if you believe in the project and you believe it's going to go much higher, then you could buy tokens for that project and stake them to earn an extra amount on top of what you own already. The alternative ways of earning passive income through crypto, they could perhaps be, the thing is it comes with risk as well. If you are staking, then sometimes your coins are locked away for maybe 5, 10, 15, 20, or even longer, a number of days, which means that if the market was to crash like it has today, if you were one of those people who wants to sell to get out, then you wouldn't be able to because your coins are staked.
Yeah,
you'd still be earning revenue, a certain percentage through this time, but you're just unable to sell your tokens because they're locked away.
Yeah. So yeah, like you would only want to lock away tokens that you're happy, comfortable holding for the long term. But you can also do it on stable coins. You can make sort of a yield on stable coins.
Yeah.
And I'd say in the you've got platforms like Nexo and Crypto.com and even Binance and stuff. They offer a yield on your stable coins and cryptocurrencies. I'd say the cap there is probably about, you're not going to get higher than 10%, I'd say.
Yeah. The thing is, there are platforms that offer higher interest rates, but they're obviously much more riskier. So if you were to stick to the major platforms like Binance, for example, or the one you mentioned, Nexo, then as you said, they will be capped at around 8 to 10%.
Yeah, and then that kind of moves nicely into talking about so that's the kind of centralized space because you've got companies that you're trusting, basically.
Yeah.
You're trusting Crypto.com when you deposit money with them. And on the other side of the thing, you've got sort of decentralized protocols like Aave, Curve, Yearn, all these different kind of places you can lend money to other people or put your crypto into a pool so other people can trade back and forth. And you're essentially like a mini bank.
That's exactly it. I was going to say that. Yeah,
that role that would traditionally be done by a bank, but there's thousands of people, or hundreds of thousands of people doing it together.
And of course, again, there are risks involved as well. So, for example, there was actually a hack, I think a day or two ago, called Badger. So over $120 million were lost because all the people who had staked their Bitcoin in other cryptocurrencies into the pool, there was actually a hack which led to some people losing millions of dollars. So of course you can earn a certain percentage on top of what you own already, but the risks are that it could be hacked. You could lose access to your funds. There are risks involved. We can't just say, there is no such thing as a free lunch, sort of thing.
I think because I'm planning on doing more of this stuff in the new year, kind of writing more about it for people. And I think really you have to take an approach like you take to picking cryptocurrencies that you think are going to go up. You're not in the decentralized space. If you're trying to earn a passive income and yield, you're not necessarily trying to predict whether something's going to go up, but you are trying to anticipate whether something's safe enough to put your money into for a period of time. So you would look at the same kind of things as you do.
Yes.
Like your 8-factor strategy you look at the team, you look at on this side, maybe you can look at audits that have been done on the code and
exactly that. Yeah.
So it's not sort of, but then I guess the benefit is you can get much higher yields. That's the reason you would do it.
Much higher yield than you would get from a bank, for example.
Yeah, way higher. And also some exciting, we talked about it last week, novel kind of decentralized protocols that make money in different ways that can be super confusing. But I want maybe are there any sort of decentralized yield-based apps that you've tried that you think are memorable?
The thing is with some of the coins actually in our portfolio, you are able to do that. So for example, I will name one, Pancake. It's a decentralized exchange built on top of the Binance Smart Chain. It essentially serves as a gateway through to allow users to buy all these sort of meme coins that pop up. We see advertised sometimes even on the tube, for example. A lot of these are based on the Ethereum Smart Chain because it is much cheaper to use than Ethereum is. And you can actually stake your Pancake coins and it auto compounds, so you could earn a significant amount over a long term. But of course, if the tokens lose value, then the USD value of your holding also goes down. But you could earn more cake, which is a token name, through that process. So it is something you can do.
Yeah, I saw an interesting project the other day. I think it's called Pylon, and it's on the Terra or Luna network. I'm not sure it's the same what that's called. But it's basically it's like investing in a crypto project, in almost like a startup crypto project. But instead of it kind of drip feeds your investment to this company over time. So you're not kind of risking investing in if you're investing into a tech startup, you might give them I don't know, however much money, and then it's whether they fail or succeed. You either make a lot of money or you lose all of it. This is it drip feeds the protocol, the technology drip feeds this company money over time, and it kind of, I guess the idea is your money is secure in the protocol, and the yield is going to this startup, whatever.
Interesting.
And they're using that to grow. So your initial capital is essentially secure. You're not getting the yield that's going to the company. But in the future, I guess if the company is making lots of money, you get some kind of larger thing. But it's I don't know, just sort of ways that these projects are trying to take what you would do in traditional finance and then
essentially
in some way. But it can be confusing. I was trying to explain that, and as I was doing it, I was thinking, I don't understand this totally. But
some of these protocols are very complicated, and you do need to read it a number of times to better understand it. And even then, so it is perfectly normal for some of these protocols to still be confusing after the third or fourth time you've read it. There are some very intelligent, talented people working on these, and it is going to be difficult to understand. So I understand how it can be overwhelming for example, for newcomers, seeing all of these and being like, okay, so what do I do now? There's so many, I'm hearing all these people making money. They've done this, they've done that, but I think you need to take you need to approach crypto with an open mind. You need to be careful. Of course, there are many scams out there where people try to take advantage of people who don't understand what they are essentially doing. And you shouldn't just invest based on hype. You need to have like a principled and a fundamental approach to these cryptos. That way, you can mitigate your risks and maximize your profits essentially.
Yeah, I think that it's hard to do that. Like just reading about a lot of the decentralized finance stuff, I feel overwhelmed and like you constantly feel like you're missing out. You should be doing this, you should be doing that. But like
definitely,
if you're just investing based on those feelings, you're going to lose money in the end. Even if you make money on one thing, you're probably going to lose money on something else because you're not doing those. You're not going through the strategy like you do with.
And it's important to remember, because it stays like this, for example, where the market's down around 15-20%, why we take out our initial capital. People say, oh, you should just leave all of it on the table. That way you can earn more if it continues going up. But it stays like these where we take some money off the table, take some money. Maybe you can reinvest that money in another project or reinvest in another coin. But
so
that way,
you mean when you send out a seller after?
Yeah, so, exactly that. So, for example, when a project more than doubles in value, we can take our initial investment and then leave the rest in risk-free.
Yeah.
And it stays like these why we do that,
I guess, it's like a big psychological boost of like, you've taken your initial capital out. Yeah. Okay. And maybe just to finish, just a quick one on, because Elliot also mentioned Polygon, which we're kind of talking about. It's one of the decentralized side chains of Ethereum, and it has very low fees. I guess we kind of talked about this in a previous episode, but I guess my question is sort of, could you just give a quick overview of that space, I guess, like the different side chain, the different kind of options, because there's a lot of them. So it's like, again, it's like, where do you start with that?
Yeah, so essentially Polygon allows you to make transactions for a lot cheaper than you can do on Ethereum, for example. What you can do is you can set it up using a MetaMask wallet, which you would with Ethereum, for example. And withdrawal fees from Binance, for example, is a lot lower than withdrawal fees for Ethereum-based projects. So you can even buy NFTs, for example, using Polygon as the payment method, and fees will be much lower. For example, if you want to buy an NFT on OpenSea at the moment on Ethereum, the fees alone would be over $100, whereas with Polygon it can be maybe 10 cents, 20 cents. Polygon essentially allows you to do many of the things that Ethereum allows you to do, but for cheaper and faster.
Yeah.
It's essentially seen as a scaling solution for Ethereum. So in that sense, there's a lot of potential in it, especially as Ethereum, we're realizing, is difficult to scale at the moment. There's just so much at stake. It's going to take a while for them to come up with a solution that works, so that's why they're taking the time to make sure they do it properly.
Yeah. And I guess there's there's Polygon and there's other chains like this, and you can move money quite easily between them. The difficult thing is, or the more tricky thing is, getting money into the decentralized space. It's easy, relatively easy to set up an account with Binance and move money into there, British pounds to crypto and Binance. The easiest way I've found of like getting money into the decentralized space is like on ramp kind of. There's a company called Ramp, and there's also another one called Transact, and there's a few others. And it basically allows you to pay for crypto with British pounds or other fiat currencies, and then it will go straight to a crypto wallet. It means you have to set up the MetaMask wallet first or whatever. But it does mean you can kind of skip the exchanges. You still need to do like KYC with a passport and everything, but
naturally. What I was going to say, there are more of these on-ramp, solutions being developed, especially ones for Solana, for example. Right. And these will be rolling out in the next few months or so, which will make it a lot easier because, as you said, you'd have to create an account with a centralized exchange such as Binance, Coinbase, FTX, and then withdraw it to your own private wallet where you can then use to interact with these protocols. But as you mentioned, you can actually use Transact, and there are more solutions coming where it allows you essentially to just skip all the other steps and just go straight into having coins on your own personal wallet.
Yeah, and straight onto Polygon as well, or like rather than having to go. Because when I moved some money onto Polygon before I went, it was on Ethereum, and I had to pay like a fee to get it onto Polygon.
Yeah.
But with this way, it's just like straight onto Polygon, and maybe the fees are slightly higher than exchanges. I'm not sure, but if there's more of these on-ramp companies coming out,
then they're going to be competing.
Yeah, hopefully the fees will come down.
Yeah,
but yeah, and maybe we probably have. It's quite a big topic, so we'll probably come back to that in the future. But
the thing is, what I was going to mention is a lot of these Ethereum scaling solutions, they are supported with using the Ethereum wallet. The MetaMask wallet. So if you set up one MetaMask wallet, you can then add all these other protocols such as Avalanche, Binance Smart Chain, Polygon onto those. So yeah.
Would you say MetaMask is the kind of best general DeFi wallet at the moment? Or?
At the moment, yes. For Ethereum related projects, MetaMask would be the one. For Solana, I primarily use Phantom Wallet, and of course, it's worth reminding that if you are going to be searching for MetaMask on Google or Phantom on Google, make sure you click on official links, because I've seen, phishing scams where people have paid for Google ads to place their phishing websites right at the top. So if you're not unaware, then you click on those and, it can compromise your computer. So one way I work around that is by using Twitter. So I search Phantom and then I find the verified account and I click on the link on their bio. Same for MetaMask and any other wallet out there.
Yeah, that's definitely worth doing, because there's too many scammers out there.
Way too many. Yeah.
Okay, I think that probably covers all of our topics today. Thank you very much for your time, Kash.
Thanks for having me, and as always.
And any questions people have or topics they want us to cover, just stick a comment in below the YouTube, or contact us to the details below or next to the podcast somewhere. And thank you very much to everyone that's listened, and we'll see you again next week.
Like, comment, and subscribe.
Oh yeah, and like, comment, and subscribe. Thank you.
Thank you.